Hey, good morning, Jens. Good morning, traders. I wish you all a happy and good week. It's a holiday week. Started Friday afternoon. We have shortened trading in the US, 4th of July. Very important holiday for us over there. That's going to adjust fire, so to speak, for our trading this week. We need to go into scalping mode and trade what I call, excuse my French, bullshit headlines. Because there's no smart swing trade for this week, really, except the one that's already working. So let's go through the headlines real quick. Overnight session, we had risk off. We had Chinese official and the Caixin manufacturing PMIs coming in slightly weaker than expected. PMIs are ultra important. If you're new to our morning meeting, then be warned. This is what we do at banks and funds. We look at the fundamental data, and the Purchasing Managers Index globally is one of the most followed economic fundamental indicators that you could possibly take a look at. It tells you so much. If you've never visited the website, go ahead and do that. You'll be amazed what kind of smart trading you get out of it for various asset classes. Euro, we saw some weakness on the back of CSU leader Seehofer offering to resign on the back of the migration dispute. For all of you in the States and the UK who are not following this, we have a grand coalition in Germany, CDU, CSU, and the SPD. And CSU's head, Horst Seehofer, is also the interior minister, and he is locked into a fight with Merkel regarding migration issues. And he basically said that talks over the weekend were useless with her, rubbish, and that whatever the EU decided over the weekend is also not in their liking. So SPD a week ago already talked about preparing themselves for a possible re-election in Germany or a new vote. So we'll have to keep an eye on that. Disarray in German politics will definitely incur weakness in the euro. So please have that on the radar. Oil gapped lower, opened minus 1.2% into the Frankfurt Open. That also caused some weakness in the antipodians, i.e. Aussie dollar, New Zealand dollar, and Canadian dollar. We, as always, had a Trump tweet that he supposedly spoke to King Salman of Saudi Arabia about raising production, Saudi Arabia's production, by as much as 2 million barrels per day. Of course, later on, the White House had to paddle back and say, no, Trump spoke about Saudi Arabia's spare capacity, and that is actually true. They do have spare capacity of 2 million barrels per day that they could pump easily into the market. And they are the number one in that by far when it comes to spare capacity. No one else gets closer to them or to that number than Saudi Arabia. So if we need additional oil, that would be the producer that can pump right away. For your guide, I took a look, and in June, Iran exported 2.61 million barrels per day. So once the sanctions go into place, and once Venezuela is also having severe difficulties bringing their oil to the market, plus we still have transportation issues out of the fracking areas in the US. That is the fundamental reason why we're seeing oil prices, that we did see oil prices higher. Now, on today's last slide, I'll give you a price level where I'm looking to short into if the market context and environment is right during that week at that time once we get there. New Zealand. We had the New Zealand's Treasury economic indicators coming out overnight. And unfortunately, we did see some weakness because the Q1 growth that came in was below Treasury's forecast. There's also a widening in the current account deficit. If you don't know what the current account is, Google it, go to Investopedia, learn about it. Europe has a very strong current account surplus. So the euro fundamentally is a strong currency, fundamentally based on the current account surplus due to us exporting more than importing. Naturally so, largest and strongest economy in Europe is Germany, export champion. So New Zealand has a widening current account deficit that is negative for the currency, below growth and expectation for Q1 GDP, weak for the currency. And Treasury said they see less signs of momentum for economic growth, also weakness for the currency. On top of that, we have the US dollar paying you out of the G8, the highest carry interest rate currently, which used to be New Zealand dollar. So there's still global flows out of the New Zealand dollar into US dollar. Then we have another report, the Bank of Japan Tankan report, and that was underwhelming. Yeah, slightly weaker. That is leading the market towards expectations that the Bank of Japan may have to revise lower their inflation forecast measured by consumer price inflation, and also that their ultra loose monetary policy will be in place for longer. Really nothing surprising there. What I found surprising this morning was the weakness in Japanese equity, because global fund managers like Japan, we see global funds flowing into Japan. We even saw some flows out of Europe into Japan. So here is a scenario once we hit relevant levels where I expect that this dip may get bought in Japanese equities, if you want to have a look. NAFTA. Here I'm specific about Canada and Mexico. By the way, if you follow Mexican peso, the far left-wing candidate won this weekend's election with a majority in parliament. So initially there was a bounce in Mexican, some strength in the peso, and that was then priced out of the market again, because left-wing governments mean socialism, and where socialism ends, you can have a quick look at Venezuela and then you know where that shit ends. Sorry for my French, but socialism is just not the way forward. So that is one of the problems that we see with Europe as well, long term. Okay, Trump wants to wait until after midterm elections. That I found interesting enough. He wants to wait after midterm elections before he decides on further steps when it comes to NAFTA negotiations. That's relevant. Also, Trump is supposedly, you just have to follow this guy's tweets, unbelievable, phase 2 of his tax plan. This time he's considering lowering the corporate tax rate from 21 to 20%. So that would be another stimulus. Then EU warned the US that car import tariffs could result in global retaliation that could impact as much as $300 billion of US goods. And that's why we're seeing sustained strength in the Japanese yen as a risk of currency. And we did see a sustained bid in treasuries, meaning that the 10-year yield is dropping. But we will also have to consider that we had month end, quarter end, and half year end last week. So naturally there were some readjustments, and even though 200 billion came to market in new supply, there was net new supply of 48 billion last week. There was month end flows, quarter end flows, and half year end flows that supported the treasury. Sorry. So that was, by the way, one of the reasons why the euro, or euro yen, euro Swissy short trade hadn't started to work yet, because we did see adjustments, month-end adjustments, where flows go into the euro due to repositioning of asset allocations in international mandates. All right, wrong button. Here we go. So the trade that is still open is short euro Swissy. This is a 4-hour chart. You can see that we got triggered into the trade. Trade started working for us, then went against. We have half a position on. Now we're slightly ahead in the trade. It's going to take a while. If we were to get lucky, I don't expect it this week, the second half would get triggered. Don't really think we're going to get up there. Really honestly think it's south side for the euro. In terms of strength versus weakness, this is a wrong chart, not good. This is the correct chart. We did see risk off. We did see some strength into the flows into the Japanese yen, and then out of Aussie, out of New Zealand, and then pound. Due to numbers just a second ago, we saw a recovery in the pound. As you can see here, this is live, and some reversal of the yen, yen coming off. So still risk off scenario. Let me get this out of the picture again. Still a risk off scenario in terms of data this week. Really what's relevant to us is that we have the RBA, and here again we're going to look at the statement. We do have some PMI numbers coming out. So we have ISM manufacturing PMI in the US, slightly weaker. And recall that Chinese PMIs came in slightly weaker already, and that caused risk off. Yeah. Then we have building approvals in Australia. That could be positive for the Australian dollar. We have the RBA rate statement. I'll talk on that in a minute. In New Zealand, we have the GDT price index. Recall that the price of milk is an important factor for the New Zealand currency and the New Zealand economy. Aussie dollar, we have retail sales slightly weaker expected and a trade balance that improved. So there's another potential positive for the Aussie dollar. So if you wanted to look at a chart, have a look at Aussie dollar versus New Zealand in terms of longing it off of bottom edges. We have services out of China also expected to be slightly weaker than last time. Pound services also slightly weaker. I mean UK. We have Carney speaking, Whiteman speaking. Then we have ADP. ADP and ISM non-manufacturing, there is a component in there. Both of these will give us a heads up in terms of NFA and then NFPs on Friday. We need to keep an eye on this. ADP is expected to come in a little bit better, and then services PMI also. So expect some strength of the US dollar if these numbers are coming in better than expected. And the FOMC meeting minutes, of course, focus will be there because we're right smack in the middle. Thanks to one of my traders this morning already sending me a chart by Commerzbank Research. We're right smack in the middle where the market is pricing in 3 versus 4 rate hikes for this year, meaning 1 or 2 more hikes for this year. And we need to keep an eye on that because depending on that, we will see dollar strength or weakness. Canadian employment numbers I'll speak to on the next slide. All right, so the risk events in focus. Dollar. Recall, non-farm, 200,000 are expected. 223 came in last time. That's slightly down. Don't get overexcited based on this number because while it's slightly down, it's still stronger than recent averages. So we are in line. Focus will be on average hourly earnings growth, average hourly earnings growth, which is seen ticking higher to 2.8 from 2.7 year on year. This is an indication for rising inflation pressure, and that would then tilt the balance towards potentially 4 hikes, and that would then yield to further dollar strength. So you want to take a look at dollar yen long, for example. Then a heads up given by ADP employment change figure, which is expected to come in better than last time, and the employment component of the ISM report. Banks are looking at those 2 puzzle pieces to give us an indication for Friday's non-farm. And then we run our models and we are zero surprised by the number because we're already pre-positioned. Canadian dollar. Friday employment change forecast is for the economy to have created 18,000 jobs in June after a disappointing decline in both April and May. It's interesting because all over the globe, we had a weaker economic growth scenario for Q1 of this year, all over the world. Overall employment has fallen 49K in 2018 versus outside's 174K increase in the last quarter of 2017. So you may recall Canadian growth in 2017, economic growth was superb. Canadian dollar saw some strength. Now we have a higher correlation of the Canadian dollar with oil prices again. If I expect oil prices to sell off of top edges, you may want to take a look at potentially shorting Canadian dollar or long dollar Canadian dollar off of bottom edges. All right, Aussie dollar. Tuesday, we have the RBA rate statement and cash rate. It's expected to come in unchanged at 1.5 versus 1.5. So if you were in a webinar with my traders or in a seminar live, I would now ask, all right, guys, when is the RBA expected to raise and hike rates next? Because the market always plays a scenario 6 to 18 months in the future. So here we need to figure out when is that going to happen and what is the market pricing in. And I'll help you out here. Analysts are divided on the rate of the future path. The median expectation is for unchanged rates by September of 19. Roughly 35% of polled analysts expect a rate hike by June of 19. All right. So median September 19 unchanged. 1/3 roughly expecting the first hike by June of 19, and 59%, almost the balance, expect a steady outlook. So only data that comes in much stronger in terms of inflation expectations, PPI, for example, pressuring CPI to rise, would then potentially tilt this from 35% towards more. Once we tilt this in a significant way, this expectation, you will see strength in the Aussie dollar. Based on positioning, we are waiting for the strength in the Aussie dollar, and we have been waiting for a good solid month so far. Rest assured, it's going to come. The question is only when, and we'll need to keep an eye on this. Inflation in Australia at 1.9 currently lags the RBA's target band of 2 to 3%. So that is a problem. So we need to look for earnings pressure, for input cost pressure, for a weak Aussie dollar importing inflation pressure. Those are three key components that could cause inflation to rise. Once that happens, boom, expectations will change. Global flows will go back into the Aussie dollar, and there you go, you have that strength. So pretty simple once you know what to look at. Recent data showed strong exports and employment figures. So that's positive. Very strong employment figures. The hope is, it's called the Phillips curve, that strong employment will lead to increasing average hourly earnings, and that would be a cost factor that would tilt the economy towards rising inflation. But what is the headwind specific to Australia? The housing market is slowing. We saw April building approvals coming in at 1.9 versus 4.1 prior, and we have wage growth at the slowest pace ever. So this week we have building numbers coming in, so that's why we keep an eye on that. If they come in much better, boom, you'll see some strength in the Aussie dollar, and then you would trade Aussie versus New Zealand, for example, or Aussie versus yen if we have risk on in that moment in time. And wage growth, that is the one key component that I'm furious about. I need to see that wage growth picking up so that I can increase my position in the Aussie dollar. All right, on to positioning. Talking of positioning, first off, you can see here that the large specs and large traders raised their aggregate bullish bets on the US dollar this week to 11 yards. 1 yard is $1 billion in Trader Talk. So 11 yards long, you can see this little bit is going bullish. So commitment of traders. Aussie continues to be on its way to a long signal. Swissy, long signal triggered, I think 1 or 2 weeks ago. Kiwi on its way to a long signal. All right. Not there yet. Volatility coming off in the euro. Now I expect that to jump if there was political crisis, and then that anytime vol jumps, you have a great opportunity for scalping. Pound volatility increased a bit. Yen volatility increased a bit, and US equities. It's funny because last week we were talking about, or was it in here? I don't know. I had stated long vol, US volatility, good position, good trade, and then that day it jumped, and we made some good money on it. Option pricing, only bullish in terms out of the pricing models for the London session was long dollar yen, already triggered. If you look at the chart, there's nothing bearish. Option flows, we had long pound. That worked because of the PMI. I think it was PMIs that just came in. Give me a second. Let me have a quick look. No, it was manufacturing PMI. It came in at 54.4. Expectations were 54.1, and the pound jumped on it and continues to hold the level. And as I'm looking over, I see the euro jumping a bit as well. Good. So pound, yen, that worked. Swissy, that worked. And gold, well, gold is at a bottom edge. If the dollar were to come off, gold were to rise. Bearish for Monday, Aussie, Canadian dollar, and euro. And we see Aussie is working, euro is not working. Canadian dollar is sideways. Potential trade this week. No smart swing trade for this week. because the senior traders are not on their desks. They're in the Hamptons. It makes no sense. The juniors do not have the right to run large positions or start new positions. So the short, sorry, it's a Euro Swissy. The short Euro Swissy that we have on is alive and good. I would trade it again now. Yeah, anytime you're in a situation where you don't know if you want to go long or short something, or you still have a position on, that is, ask yourself, would I put it on the books now? If the answer is yes, then you're still good. If the answer is no, take your trade off. I'm looking to short WTI around 73.5. If at that time leading inner market analysis and volume says go, all right? But that is the next decision point where I'm interested in looking at the chart in terms of a swing trade. For today, we have dollar yen. We have $1 billion in options running off at 4 p.m. Frankfurt time at 111 the figure. So I'm looking to potentially short the 111 for a scalp. I don't really think it's going to go into a swing because that is against current economic environment. We had an underwhelming Tankan report, and we are solid when it comes to flows into the US dollar currently. You could reverse it and you could look for a scalp long into that figure now. So if you're getting a long signal somewhere dollar yen, then that 111 would be your profit target by 4 p.m. Frankfurt time. All right. And last but not least, looking to long dollar CAD, and that is in direct correlation with oil. So if oil prices come off, I want to look for a long trigger in dollar CAD. I would long at a slight pullback to 131.5. And the target is just 60 pips above, so it's not a real big trade, but has good odds at 132.10. That's it from my side. Let me see. Nope, no questions from your side. So I see a lot of people are coming back. That's good. Thanks for spending your time with us in the morning. And have a look at your chart, because your technical analysis skills will work once you're in the right chart. Right? The problem with technical analysis is that you're looking at technical analysis and you're screening charts for signals. That's horse crap. Nobody does that on the institutional side. We do it this way around. We're looking at fundamental and sentiment reasons, and then the chart can actually help you beautifully for your entry and exit points. Thanks a lot, guys. I'll catch you next Monday. I hope you have a good week. It's completely fine not to trade this week, really is, if you don't want to sit in front of your screens and scalp, because like I said, the US big boys are on the beach in the Hamptons, and it's an important holiday in the States. And once that market is off, consider having a week off as well. Thank you, Jens. Thank you, guys. I'll speak to you next week. Bye-bye.
Thank you, Jay. Tomorrow is another day. We have 5 days a week, 5 different traders. So if your time allows us, just visit us tomorrow again to the same time. And don't forget, full July, we will party and celebrate the DAX. You will get the best DAX spread ever to the main trading hours by Xetra electronic system. Just 0.5 points. No registration for a campaign, no minimum requirements, just trade with the best ever spread. Why? Because the 30th anniversary of the DAX index itself. Thanks, and hope to see you tomorrow again. Bye-bye.